Hello and welcome to the Ecom Sales Tax Podcast. My name is Ryan Johnson and I've got Dan Peisner back with me today. Dan, how's it going?
It's going well, Ryan. Glad to be here.
I'm really glad you're here as well. So today I thought we would cover what we call our next reviews. And I know you deal with the next review, and I kind of wanted you to cover what it is and what the service incorporates.
Oh, certainly. What a next review is it's essentially a 5,000 foot view of your overall tax liability for sales tax. And what we look at in a next review is Nexus, exposure, and taxability, which is where the next comes from. And we always say to start with Nexus. So we will look at both the physical. We look at an exhaustive questionnaire of your activities in various states and look to see if those are nexus causing in every state. We will also look at your economic activity over the last couple of years with Wayfair and most states now having some form of an economic nexus law. We want to make sure to check that as well and see if you've got economic nexus. Once we've established nexus, we then go to taxability. And this is not as big a deal if you're selling a common widget or you're selling a random, say, mouse pads or any tangible personal property. But when you start getting into certain classes of property, say dietary supplements, foodstuffs, or software as a service, anything that a lot of states may not tax, or if you even get into services that only certain states tax, then you're going to want to look at taxability as well, because you may have nexus, but if the state doesn't tax it, then you don't have any tax liability. And once we've looked at both of those, then we look at we'll look at your final sales that you've been deemed as taxable. And then we try to calculate out the rough estimate of the tax that will be due, along with penalty and interest potentially. And as I said, this is a 5,000 foot view. We're not going to run complicated tax rates on every transaction. We're not going to try to run a perfect 60-day interest calculation with changing interest rates each year. We're just trying to get a ballpark figure and get an idea of how much potential liability you could have within a rough estimate, really, because that's going to determine what approach we recommend for remediation. Is that if it's a large amount, we're probably going to recommend something akin to a voluntary disclosure, or even if taking a look at your specific customers and seeing if you've got any resale, any exempt customers, if any of them are state or local government, and if we might be ripe for further reducing your exposure that way, or just seeing if we need to go ahead and look into a voluntary disclosure or some other form of compromise with the state. And then some of the smaller numbers, we may just recommend that you get registered and just remit the tax to the state on returns, rather than going through a formal voluntary disclosure process. If you're going to pay more in fees to a practitioner than you could get in benefit, then a VDA just does not make sense. And so we use the next reviews just to give you an idea of what you're looking at and where things are at. But then also, as your business expands, if you've got the taxability component, looks at all the states. And so as your business is expanding, you can quickly look and see if you're going to be taxable in a new state. Then you may want to make sure you get registered once you become taxable, and that way you're being proactive rather than reactive in all cases.
So Dan, in summary, what are some of the deliverables that a client would get from a next review?
Well, with any next review, we've got two deliverables. Once we get everything and we've done our work and we've asked our questions, we're going to give you the report, and then we're going to get you on a consultative call, and we're going to go through it, and we're going to try to understand your individual facts and circumstances. There is no one size fits all for these, and we're gonna talk through it with you and help you to just understand it and see if there's anything that we missed. If there's any, maybe you'll mention something that you didn't think about previously, and then just help you come up with a plan going forward, whether that's just to get registered in the States, to do a voluntary disclosure, or if you, or anything in between, really. So we don't just provide you the document and say, here you go, good luck and safe travels. We also try to really walk you through it and help you to understand it.
Excellent. Now, when reviewing taxability, do you just look at products or do you look at services as well?
Well, we try to look at both. We may not look, if you've got a one-off product that you sell maybe 3 times a year, we may not look at that unless it's huge money, but we try to look at all your products and services, because that could, well, the Wayfair product, you may get weird answers, but if 90% of what you sell is not taxable, then that may give you a very different answer than if everything's taxable. So you really have to look at the whole picture and not just the convenient pieces.
Excellent. Well, that's all the questions I have for you. And if a next review sounds like something that you would like to get done, or you're unsure of your Nexus footprint to the taxability of products or services, we highly recommend getting this next review. And like Dan said, one size does not fit all. I mean, you guys are doing business, or your clients are doing business, and they're doing different things than another one of your clients. It's important that we get this next review done for you. It could really benefit what you're doing and give you great recommendations on how to move forward. All right, Dan, thank you so much for your time today. And I really hope we can have you on again soon.
My pleasure as always, Ryan.